All right, we have the Lockton Insurance crew here, and we're recording this first thing on a Monday morning. So, y'all are real troopers. We were just chatting before this that my boss gives me trash every once in a while about the fact that I love a good first thing Monday morning meeting. No better way to start off the week, and y'all are being so sweet to join me on this early Monday morning adventure. But thank you both for joining. And I think I love anytime we have two guests on the podcast at once. It's always more fun. So give me some quick background on each of you and just what Lockton Insurance does.
You bet. Thank you so much for having us, Dalton. We certainly appreciate it. And Allie and I both are at Lockton. We're on a very specific team within Lockton that handles large residential risk from home building to multifamily, single family for rent. Myself and Allie are both client advocates for Lockton, meaning we control a large book of business. We advocate for our clients not only in the marketplace, but also with counsel for coverage terms and conditions. And um, 12 of us in general on the team, and we've been successful in the space for many years. I think the difference, what separates us, is that we start early. So we've got a team that half of us start around 5:30 in the morning. We go to 5:30 p.m. Pacific time. So our East Coast clients, we have a large track home builders over on the other side of the country, appreciate that extra hours towards the end of the day that we're on the clock. So our roles are, like I said, very similar. And again, I'm Andrew Douglas and Allie Carter.
I'm Allie Carter, yeah. And we really do hone in and focus on, strategic risk management planning for our clients, right? And putting
Yeah.
together really specific and like niche white glove services to our clients
Yeah.
that are really specific, to each client's
Yeah.
need.
We, and one thing to add is we always try and go outside the box, like
Mm-hmm.
Ali said. So anybody can be a broker of insurance, but when you start delivering solutions to the marketplace that have not been seen before or talked about before, or connecting underwriters directly with their clients, those are where we focus all of our attention, is trying to go above and beyond the normal roles and duties of an insurance broker.
Yeah, the fact that y'all have such wide coverage on a day-to-day basis, us as a growing company over the years, we've had to deal with, had to figure out, right, like how to most effectively serve the client base because we're in the southeast and part of our lending map growing further and further west and west over the years, and that's something we tried to tackle. And Allie, you mentioned white glove service, and so much of it comes down to that. Like we sell
Mm-hmm.
money, y'all sell insurance. There's so many groups that do the same. It's like, how do you differentiate yourself? And our money spends the same as a competitor's money, and same thing on the insurance side. It's like, how do you differentiate that? So much of it comes down to customer experience and the white glove service side. So it's always fun to chat with folks from another shop who really have that philosophy and approach. And I think another piece is some of the content you all put out in market updates. And I was thumbing through a market update over the weekend from Lockton, and it talked about inflation. Right, that's if there's year by year, or if there's a buzzword. 2020 was COVID. I don't know what 2021's buzzword was. Probably, can we be finished with COVID? And then 2022 is, I think we safely could say inflation is the word of the year. So how does inflation affect the insurance world? Right, I'll want to lob that big ball over in your court.
I can touch on that.
Mm-hmm.
And we're pretty big on statistics, Dalton. So inflation is affecting the property market. And we'll get into why in just a minute or two. But the statistics that we're seeing on renewals for properties with no catastrophic exposure is around 10%. So just expect that. You have to message that correctly as a broker to your clients as to why. You can't just say, here's 10% and it's a hard market. You have to give them specific examples of what's driving this. But to answer your question, inflation is driving renewals. On average, we're seeing 10% increases. Properties with catastrophic exposure, let's say, for example, Texas, Louisiana, down by the coast, even without any losses, no big catastrophic losses, it's 15% just based upon their location. Okay, because they're expecting things to happen. Modeling is changing. You know the world is changing. Climate is changing. So that's being looked at closely. And then when you take it one more level, we have clients that are in catastrophic areas that have sustained losses, whether it's wind, fire, flooding. It's 20 to 25% from the renewal increases. So it's where you're choosing to operate, where you're choosing to do business, and to look at those metrics and to expect that just from a business operation standpoint. And like I said, things drive this.
Mm-hmm.
We like to give examples of why this is happening, and maybe let Allie touch on a couple, if you don't mind. But I think it's relative to the inflation conversation.
Yeah.
Yeah, definitely. I think, as Andrew kind of mentioned, it's no secret that we're in a hard market, right? So, like, premiums are at, an increase, and then capacity is decreasing, right? And I think that, you really need to look at the state of our climate and natural disasters and really what's been happening over the last 50 years. I think there's been, increases in frequency and severity to the natural disasters, whether those be wildfires, thunderstorms, wind, hail,
Okay.
earthquakes. We've had, just immense flooding across the nation. So, I mean, even in the last like 3 years alone in California, we've had around 25 billion in losses. So, all of those things
Yeah.
contribute to carriers having decreased capacity,
Yeah.
right? And then I think to take it one step further, you have to look at, again, over the last 50 years, we've kind of had this big migration of people who are moving like from coast to coast, right? So the more people that you have, the more structures that are being built, like all along the coastline, it just increases the risk there as well.
I, to touch on that, moving from, let's say, the past 2 years, for example, right? California, a lot of Californians went to Texas, as we all know. So what part, where did they go? They want to be by the water, so they go to those coastal type areas. New York, New Jersey, those guys are coming down to Florida. So as Ali mentioned, the demographics are changing, and it's a more populated or more dense area. And
Mm-hmm.
a specific claim example I'll give you is, we remember the flooding in Kentucky this past
Mhm.
summer, early spring, Missouri, Kentucky. That's $1 billion is going to be ultimately the losses that the insurance market are going to see from that. So um, it's not helping our cause, but it's something that must be messaged as you look to the renewals, like I said, which are going to be increasing. The fires, there's a fire in Canada, another $1 billion, started in a sawmill. And these models, they can predict when these properties are in flood zones or fire zones that this is a probability that's going to happen. What they can't predict with the fires, which is an interesting one, is human behavior. You can't predict how someone's going to have a campfire that jumps
Mm-hmm.
into burning thousands of acres in Northern California. So um, you have to rely on modeling, but there is a little bit of unpredictability with human behavior.
Yeah, I didn't think about that being a nuance on the wildfire side. And, over the last few years, it seems like not only has the frequency of those increased, but the magnitude has increased as well. So we're in hurricane season area, and I grew up on the coast of South Carolina, so I remember evacuating, and then eventually, the more years you lived there, it took a bigger and bigger storm to get you to evacuate. Um,
Yeah.
but you think about Florida, right? Like when I
Mm-hmm.
started in the private lending space, um, a little over 7 years ago as an underwriter, Florida was always kind of the wild card when it came to insurance, flood insurance, and all that's tied around. So much of it's tied around natural disaster, right? So can you unpack for me a little bit why Florida is this beast? Why so many carriers just say, "Hey, we're just not going to operate here. We're going to drop coverage." And are there any other states, markets, areas that are in that high concern bucket, and you see from an insurability standpoint those areas just deteriorating over the next few years?
Mm-hmm.
Go ahead.
Yeah, I mean, I think, Florida it's an exceptional state, right? Because you've got the humidity, like you said, you've got the flooding, you've got hurricanes, and I think something that not a lot of people think about too is there also is a risk for wildfires in Florida as well. So your wildfire like high risk states, it's going to be California, Texas, and Florida. So right now there are about 3.9 million properties in Florida alone that are in high fire hazard areas. So like I said, I think it's going to be California, Texas, and Florida.
Mm-hmm.
If you're going to pick out three states who are going to really just be the toughest, it's going to be those three. And again, it goes back to the climate and just the state of, natural disasters and the frequency and the severity, kind of like we mentioned before. Do you have anything else you want to add to that?
I mean, you look at, you know, Allie mentioned fire. It is the major issue. You mentioned wind, Dalton. Wind is expensive. It's like buying earthquake in California, right? So a lot of folks choose to surpass that because they say if indeed an earthquake happens and it affects our structures so much to where they fall down or
Mm-hmm.
are not replaceable, then the Fed will come in and declare it an emergency, and then they begin to make reparations. Where wind is the same thing. It's just on the other coast. We don't deal with wind so much in California, but our clients in the east do.
Mm-hmm.
And wind is expensive. It's expensive as earthquake. And you look at an inch of water when the wind causes flooding in Florida. So this is what the underwriters look at. I got wind problems. Now I got a fire potential exposure in Florida, and I've got flooding issues. With flooding for an inch of water in your home, you're looking at $20,000 to $25,000 of cost to fix that issue. Fire is usually a total loss, a destructive loss. So to answer your question, it's kind of a double whammy in Florida. I don't want to say don't do business there because a lot of folks do, but they look at this risk and they accept that risk and are willing to take that on.
Got it. Does In terms of, we talked earlier in the episode about premiums rising. I assume things are looked at market by market, state by state. But if you have, massive wildfires in California that are way above the average and what your assumptions from a model standpoint assumed prior to all these fires popping, that's going to affect rates, not just in the specific market that's affected, but that's going to affect rates across the board, right? And true for any
Mm-hmm.
natural major, out of the norm, way worse than we anticipated or modeled natural disaster, right?
It will, and when these wildfires happen, not only is it affecting the direct markets where we place coverage, it's also affecting the reinsurance markets. So throughout the year, reinsurance markets are the ones that insure the carriers that are writing the business. They will analyze their own book as well. And the reinsurers have been upping their treaties or their rates. It's a treaty is a fancy way of saying rate, essentially, what they're going to charge these insurance carriers to do business with.
Mm-hmm.
That's been rising as well. So it's affecting both of them.
Got it. That makes sense. Doesn't seem like any of it's going down anytime soon. Doesn't seem like anything's going down anytime soon. So from one thing that we have, uh, a lot of investors making moves from the single family world to the multifamily world, right? Going from that 1 to 4 unit property up to the 5+ unit property. Like, does insurance change in that world? Are there any tips, tricks, things to watch out for that you would tell an operator who's looking to go from single family to multifamily?
We've experienced that as well. Our clients traditionally have been very large single family detached for sale.
Mm-hmm.
They pivoted more to multifamily lately, as well as single family for rent is a very popular product type out there.
Yeah.
What we tell them, Dalton, is make sure to engage counsel. Make sure
Mm-hmm.
that your brokers that you're using have the right team of attorneys that can review contract language. Make sure that where they're operating and doing business is looking at the trade contractors' policies. Are they compliant? Are they going to protect the owner in the case of a loss. Single family detached, totally different animal than multifamily or single family for rent. From a liability perspective, there's a lot less exposure. But from a property perspective, there's more. So it's a balancing act, right? So where you're building, there is that property placement once the assets are in place that you need to manage, whether it's in coastal areas or out in California. But they're two different animals, and we're experiencing a lot of help from attorneys getting involved and looking at contracts and terms and conditions for the insurance policies that have been helpful to us.
Mm-hmm.
Yeah. So similar topic, you have values, right? We've had crazy HPA, home price appreciation, since COVID kicked off, which is, I don't think that's something that any of us in the space expected back in March 2020. Right? I think the first feeling everybody had was, oh no, here goes another '07, '08, everything's going to crash. And then it didn't, right? Because it was a healthcare issue, not a housing issue, not a fraud issue. It was just healthcare that didn't do anything to take away the fact that we have a lack of supply of housing in the country, which helped push up prices, helped push up rent. You didn't have a lot of building going on because of lockdowns. Then you roll into today, really a couple years later, and you still have supply chain issues, you still have labor shortages. So all of that ties up into, I think, keeping home prices and rents strong, but we're starting to see some, at least deceleration in home price appreciation, and some markets really move back to the norm. I think we've, as a space, may have forgotten that it's not normal to list a property on Friday and have a dozen offers on Saturday. That's not the
Right.
norm. A normal market is home's going to take, a couple weeks to sell. Not the craziest thing in the world. Uh, but all that said, how do you deal with that in the insurance world? Home prices skyrocketing up, starting to pull back, up and down,
Yeah.
and just the uncertainty that, for so many years before COVID, it seemed like everything was pretty stabilized. You didn't have too much outside of the norm, and now you have uh, just more uncertainty than we've had in recent past. And so, how do you model that out? How do you deal with that on an insurance cost standpoint?
I can touch on this one.
Mm-hmm.
So one of the things, the responsibilities for large operators, Dalton, that are in that space is we as brokers partner with our clients to make sure that quarterly we're reviewing those values to make sure the construction value is in line. Like you said, there's some factors that are making those price valuations go up and down. So got to stay on top of that. We want to make sure there's no surprises, because we are seeing those carriers look at that very closely, and it can be very penal if you're not up to date on those construction values. A solution to this is midterm, for example, of your property builder's risk policy. You look to put in place excess layers. It's an option that can mitigate cost if your limits, you go burn through your limits.
Mhm.
Look to the cost to put in some excess layers midterm. And I say midterm because it's a lot easier. Conversations, underwriters are not flooded with submissions. They can take that midterm conversation in a timely fashion, and that's a solution we've seen to uh, this challenge, I would
Mm-hmm.
say.
Yeah, that makes complete sense. That's a really good actionable piece. In terms of your space, what do you think some of the biggest challenges or pressures on increasing insurance premiums? What is it? Is it going to continue to be inflation? Is it natural disasters? What do you look at and say this is going to stick around? This is going to continue to put upward pressure on premiums?
That's a good question. You want to take that one?
That is a good question. I mean, I would say it's probably, just a mix of what you just mentioned. Natural disasters, I think, is really a huge one. Just because, we're not really sure what the state of the world is going to look like, 5 years, 10 years, 20 years from now, right? We don't know how much more severe our natural disasters, could be in the future. And I think also too, you have to look at defects. You want to talk maybe a little bit about like product?
Yeah, as there is a housing shortage, as you
Mm-hmm.
mentioned, we know that, you guys know that. The solution to that, everyone thinks, is density. Like, let's build as many units as we can. Let's move from that single family detached to that, whatever it's, if it's multifamily, townhomes, condos type of model. The issue we're going to have there is, as you become more dense, and the most simple way I can put it is folks live closer to each other. Um, if there's something wrong with one particular unit in this townhome development or condo, it usually resides in all of the units versus a single family detached home. There may be issues that can be fixed in one home, but as a developer, in a condo unit of, say, 20 condos, if there's some sort of defect, whatever that may be, they're going to have to go in and deal with class action lawsuits, right? Class action, we're going to go against the developer, all 20 units get together and combine efforts against the developer to make sure they mitigate the situation. So that's something that we'll
Mm-hmm.
continue to deal with. One of the things that we always tell our folks is, if there are issues, go in and fix them. Don't wait until the lawsuits come. You're going to avoid a lot of frictional costs. You're going to avoid litigation costs. So as your home buyers, if there's anything that they express that they would like taken care of within the norm,
Mhm.
go fix it, and it'll save you money in the long run. That's something that we measure, and we've measured for many years. So that's important.
Yeah.
Mm-hmm.
Yeah, that's super insightful. One thing it made me think about is carrying flood insurance when you're not in a flood zone. So my primary residence not in a flood zone. I absolutely carry flood insurance. It's like $500 a year, and for that peace of mind, because growing up on the coast, everybody carried flood insurance, right? Because one point we were 150 feet from the ocean, and it's like, yeah, this is in a flood zone. I
Right.
have to carry flood insurance. But you look back at Houston, some of the other massive rainfall events that so much of the loss was not in a flood zone.
Right.
So I think I know what the answer or route of the answer is going to be. But thoughts on carrying flood insurance when you're not in a flood zone? Because I think it's probably, in my mind, one of the most frequently overlooked. I don't even need to think about it. Parts of the insurance world.
Let me take that if you don't
Mm-hmm.
mind. So that's a great question, and I agree with your methodology on purchasing the flood insurance. I'll give you an example of, in Houston, there was a very large development, hundreds of homes being put in place that happened to be higher up in elevation than a neighboring community.
Mhm.
There were some rains that came in. We're talking Houston. Some rains came in and it washed some dirt, silt, water all into this neighboring community that ultimately flooded 100 homes. You're going to need to have, not only looking at the climate, but also looking at what's going on around my house. Are there developments? Could anything potentially affect my home that way? So that was a very expensive claim that happened, I don't know, 2 years ago.
Mm-hmm.
But ultimately, it was settled, but for quite a bit of money. But the flood insurers kicked in, and for those who had the flood in that neighboring community that had to just be sitting down a little bit elevation wise, it was a wise decision. So
Yeah, it's especially knowing that that science is science. That hurricanes are getting stronger, slower. That
we're
dumps more
predicting
water. Yeah.
they're predicting the seventh year, right now, consecutive year of more hurricane activity. I don't know if that's from climate change. Who knows what that's from? But it's continued to trend. Hurricanes have gone into September, October, versus in the
Mm-hmm.
past, the end of September was the end of hurricane season. So, if you're looking at buying wind coverage for eastern areas, coastal areas, look at it well ahead of time. Don't look at it in hurricane season, because if you come to an underwriter and say, I need wind, and it's July, it's going to be a tough conversation. So that's something you want to look at in January, February, or something like that.
Yeah, that is good knowledge. Good to have. All right, Andrew, Allie, I can't thank you enough. This has been great. We have to get another check in on the books here a few months later just to see what has changed in the insurance world. It's something that they just often overlooked and thought of as a secondary piece, but the age old saying of you don't care about it until you need it, and it is such an integral part of the world. It's an integral part of the world for every lender because we all require insurance. It's an integral part for operators because if you're not properly insured, you have just a massive dark cloud hanging over your head. And sure, you may be lucky, but also it is a constant all over this country that you have weather events, just completely unexpected, wild things happening. My sister lives in Dallas, and they had crazy rainfall a month or so ago where some places got 15 inches of rain in 24 hours. And you're like, it
Right.
pretty much
Right.
doesn't matter what your property looks like. There's a high chance that you had some water related issues or just a complete flood because few places are meant to sustain that type of rainfall over that short period of time. So there's just so much unknown, and I'm a little geeky and passionate about the weather world, and so that's why I always go back to just like these weather events.
Snow in Malibu.
Yeah,
Who knows?
In Newport Beach, yeah.
It did snow
yeah,
in Newport.
It snowed in
Snowed in
Newport,
Newport
yeah.
Beach. So
insanity. So go get your flood insurance, your wind insurance, your earthquake insurance. Get all of it. We were in Hawaii for a friend's wedding back in April, and my wife was like, "Oh, Hawaii is wonderful, but I would always be worried about the volcanoes. So if you're in Hawaii, get your volcano insurance. Small price to pay to
is
live
that a
in
real thing?
I'm sure it exists somewhere, right?
CBD. We'll next episode we'll have to do it remote from Hawaii and do some volcano insurance talk.
Absolutely.
We're in.
Yeah.
So cannot thank y'all enough for jumping on this. If people want to get in touch with you, Lockton Insurance, what's the best way?
Reach out to either one of us. We're both on LinkedIn, social media. Lockton Insurance Brokers is the name of our company. Andrew Douglas, Allie Carter.
Mm-hmm.
Allie, Andrew, thanks again. Got to have you back on here soon. And thanks everybody for listening. Take care.